In this episode, we're sharing a conversation from BMO's Chairman's Dinner featuring Stephen Smith, co-founder of First National Financial and co-owner of The Economist, in discussion with Scott Brison, Vice Chair, BMO. In this candid discussion, Stephen reflects on the lessons he learned from failure, the importance of prudent risk-taking, how entrepreneurs can navigate setbacks, and why strong institutions and independent journalism matter in today's world. The conversation also explores his recent investment in The Economist, his views on Canada's future, and the mindset that has guided his success over more than 5 decades in business. Let's turn it over to Stephen and Scott.
Welcome to Markets Plus, where leading experts from across BMO discuss factors shaping the markets, economy, industry sectors, and much more. Visit bmocm.com/marketsplus for more episodes.
Stephen, thank you for being here tonight. And Stephen was at his cottage in Muskoka, and he flew here to be with us tonight. And Canadians understand that how short our sort of spring, summer, and how precious those moments are in our favorite places. Now, you have a great interest in politics, in government. And
I do.
And you grew up in Ottawa.
I have a lot of time. I grew up in Ottawa. My father was a federal civil servant, so I know the people who work in Ottawa, and I know they're all working there at the civil servant letter to make Canada a better country. And I also have a lot of time for everyone who stands for public office and takes the time out of their lives. It's a tough gig to go back, take time from your families to go up, spend the time away from your families, whether it's provincially or federally, to work for Canadians and Canada. So I want to thank everyone of all the former and previous elected officials for what you've given back to Canada.
You went to Queen's University to study electrical engineering, and you graduated in 1972. And you then went to London School of Economics and did your master's in economics. So you went from, I guess you could say, electrical engineering ultimately is very successful in, when I say this in a very positive way, financially engineering some very remarkable successes with First Financial and Home Capital and that kind of thing. But what drew you to electrical engineering and then subsequently to economics?
I think when I was a teenager or a young child, I was always very interested in things mechanical and electrical. I was a ham radio operator back in the day when one did that. And I went and I decided to do electrical engineering. But I was always interested in economics and business. I had a little paper route, and I remember always talking to my dad about little businesses that we could do. And so when I was at first year at Queen's, I convinced the dean to let me drop geology and take economics as my option on the promise that I would not go into mining engineering, which was not a difficult promise. And from then, I just took a bunch of options and took summer courses so that by the time I got to third year, I was thinking of dropping out of electrical and going in and becoming an economist and going and get a degree in economics. And I think my father, and of course, when you're 20, another 18 months seems like forever. And I think my father was looking at jobs prospects, economist, job prospects, electrical engineer, and wanted me to finish electrical engineering. And he convinced me, finish your electrical engineering, and then you can go to graduate school. So I finished electrical engineering. I had the coursework for a full economics degree. And then I went on to LSE. And from then, I tended to be more in a business career as opposed to an engineering career.
But your first job after LSE was with Philips Electronics.
Philips Electronics, market research analyst. And then I came to Montreal in 1975 to work as a job as a research analyst in the financial department of Canadian Pacific. Then I went on to Hawker Siddeley in Toronto in the late 70s, early 80s. Then I left Hawker Siddeley. I thought I was going to be a developer, and I decided to build some houses in downtown Toronto infill on Ontario Street, if anyone knows Toronto, Ontario and Carleton. I built 3 houses there, and it was 1982, and interest rates went up to 20%, and I entirely blew up. And in fact, I had to declare personal bankruptcy in 1984, which I can tell you is, don't recommend the experience to anyone.
Yeah.
Totally destroys your confidence. And you go through a period, you're just making decisions all the time. None of them work. And it maybe looking back, you can think it's macro, but no, one's young. I shouldn't, a little bit over levered, just all the bad business here. There's a lot of things in businesses that when people succeed, they think they're smart. And when they fail, it's bad luck. My observation is the other way around. When you succeed, it's good luck. And when you fail, it's poor decisions.
Yeah.
So anyway, one advantage of that is it tends to make you a little bit more circumspect about your future decisions.
After 1984, and that would have been pretty much your first business, and that was a tough time. You've spoken about that.
Yeah.
What was it like?
That was very tough.
After that.
Very tough. I look back, I think I just remember, a little bit of a mini depression because you lose confidence in yourself when that happens, and there's nothing you can do, and it's very hard. In the end, the way I dealt with it is just get over it, and you go and get a job, and you just start over, and you go to work every day, and slowly you just build your confidence.
You were 33.
Yeah,
when that
33.
When that happened. And then how did you go to First National? We started that in 1988. So what happened, which of course has been a fabulous success, but what happened between 1984 and 1988?
Went and got a job.
Okay.
And I ended up getting a job for a small investment dealer, long gone, on Bay Street. And they were brokering blocks of mortgages between various financial institutions. And I did that, and one of my customers was Guaranty Trust, and that's a name that some of you will remember. And he was a manager of Guaranty Trust, and I was taking mortgages that he originated and some at the life insurance companies. And about 1988, we decided we'd disintermediate our employers, and I'd sell the institutions, and he'd get it for the mortgage brokers, and he'd underwrite the mortgages, and I'd sell them to the institutions, and we started above the pub on Eglinton Avenue, the Fox and Firkin on Eglinton Avenue in 1988, and we had 6 employees, and we started that. Our revenue year one was $200,000, and actually it's pretty good because we made $50,000, which for first year in is pretty good. Positive margins, positive EBITDA, it's always good for a business.
So 1984 went from that setback, and then
it progressed, and I would say what we had, a bunch of things started to happen. We went public in 2006, but the fast forward now is that First National would be the largest non-bank lender in Canada, about $170 billion of assets under administration. I was CEO to 2022, and we recently exited to a sale to Brookfield and Birch Hill last year. But that's a bigger story relating to a lot of other structural issues. But the real key was that securitization came on board in the 90s and then in the early 2000s, and that provided funding for us. It's very difficult in Canada to compete against the DSIBs because of the financial structure in Canada. We have a very safe financial system, but the DSIBs have a financial structure that the capital they hold against mortgages, you can't compete generally through. It's very difficult to compete, low cost of funds.
do you think Canada, some people think the U.S. celebrates success a little better sometimes than we do, but also that second chances in the U.S. might be a little easier to get sometimes than in Canada. It's harder sometimes to come back. You achieved that, but any thoughts on?
I think I would agree with that. I remember at First National, I was at a major bank and they pulled my credit bureau in like 1990. And they'd been dealing with me, they were happy, and then somehow they pulled the credit bureau and they were just shocked and appalled and they wouldn't deal with me anymore. And that was, 6 years later. And I would say then in the United States, if you just talk to people, they're much more entrepreneurial. Everyone seems to have a little bit of a side gig, and they're much more accepting and understanding of failure and trying. And probably reflects the way we were founded. A combination United Empire loyalists, and just don't seem to have that aggressive culture that they do in the United States.
Now, in 2019, you were inducted into the Canadian Business Hall of Fame. You've had success with Home Capital, but most recently, you bought 26% of the Economist magazine.
What came up, somebody flipped, I guess Lazard was representing Lynn Rothschild, and the Rothschilds had owned it for 100 years. So the structure of The Economist it's quite unique. It's quite fascinating. It's been around since 1843. It's probably the leading English language publication in the world globally. It was formed in 1843 on liberal economic values to oppose the Corn Laws in Britain. And at the time, there was huge tariffs on corn or grain and wheat coming into Britain, which benefited the aristocracy, but impoverished the working and middle classes. And there was huge pressure to change those laws in Parliament, which they finally did in 1845. But they started with liberal values, which would be freedom of property rights, a laissez-faire view towards the market. Values, which The Economist has to this day for all the readers. And so they very much embodied my values. In 1928, they set up a structure where they put in 4 trustees. And at that time, the ownership went to 50% to the Financial Times. And then the other 50% went to 4 English families: Cadbury, Schroeder's, Rothschilds, Leighton's, who was the editor at the time. Here we are 100 years later. FT got off their position and the Annellis picked it up. And then the Rothschilds still had 27% and they had accumulated. They wanted to get off their position. So the situation was it's been in very steady hands for a long period of time. And I think that's given its independence. I thought it was important, one, the sports team thing, but I also thought it was important to provide in this environment. It was important that we have stability with respect to independent journalism going forward and a voice like that. And, I also think we have a role as Canadians to step up and make those steps. So I thought it would be a good thing for Canada as well. So for all those reasons, it appealed to me. I'll tell you, it's really cool.
So when a Canadian shows up in London, having bought 26% of The Economist, you and your wife and your 2 children were there.
Yes.
And you met with the board of the trustees of The Economist, representing families like Agnelli and Cadbury and Schroeder. What was that like? How they treat you when Mr. Smith went to London?
What I would say it was that they couldn't have been more welcoming. Very friendly. And afterwards, I think it was more what might be called the relief rally. I think they were so pleased there was somebody as somebody said, "Oh, you're from the Commonwealth, thank God." So one can use your imagination as to where it might have ended up. And so I think they were pleased. And of course, Brits have this view that nothing much happens in Canada. So, after 50 years in Toronto, what trouble could I have gotten up to,
You say this could be really good for Canada, and I think a lot of us kind of see the potential for that. But you're somebody who thinks about these things a lot. You've been chair of Historica, the top philanthropic organization to support the understanding of, communication of, and preservation of Canadian history. You're a student of history. Now you're making history as a Canadian buying 26% of The Economist. But what are some of the ways you think that investment can help Canada at a time when we're at this hinge moment for the country and for the world, really, in many ways? And Canada has a we're getting a lot of attention these days in the world.
I think often Canadians have been good at chatting and talking, but not acting. We, as Minister said, we have had the best trade. The Americans are going to be our partners for now and for many years in the future. We can't get away from that. I think the best interpretation, we hope we can navigate these troubled waters, but I think it's important to play our cards. I'd like that analogy. And we have natural resources, and we can ship these to other countries, and that establishes our independence, and we'll get respect from our partner. And we will establish independence and power and get the mutual respect from doing that. That goes for any relationship. So I think in that sense, that's something we should definitely be doing.
When did you start reading The Economist?
You asked me that before, and I can't quite remember. I do remember talking about The Economist to the former principal of Queen's University, David Smith, who was head of the economics department in 1970. So maybe it's 56 years ago. So I'll go back. That's probably.
So you've been a Canadian business leader now, global press baron, I suppose you could, at some level, one of the most unusually humble press barons Canada has produced. And you're showing no sign of slowing down. Do you mind if anyone who has Wikipedia, you can look up? You're 75 years old.
Thank you.
You're also a fitness guy.
Yeah.
And every morning, what time do you get up?
So I get up at 5:15 every morning. For those who are familiar with Toronto, I live in South Rosedale, quite close to the Rosedale subway station. And I meet a bunch of folks there, and we cycle at 6 o'clock, and we do 3 loops through Rosedale for an hour. So we cycle from 6 to 7 every morning, and then we all go and have a coffee, and we're all done by 7:30 and go to work. And I can tell you, this is the best time of the year because it's daylight, and it's warm out, and at the end of working out for an hour, you just feel great, and it sets you up for your day. Oh. So I love doing that. In the winter, I'm a big heli skier. So I would do 3 or 4, 5 heli trips a year every year. So
you've inspired, I think, a room full of people with a new level of energy and enthusiasm for life and for making a difference as a citizen. So, Stephen Smith, thank you ever so much for everything you do for Canada. We have an exceptional actual business leaders in Canada who are also great corporate citizens. And we are very fortunate as a country to produce enlightened, globalist business leaders who actually care about the country and our fabulous citizens. And on behalf of all of us, thank you, Stephen Smith.
Thank you, Scott.
Thanks for listening. You can follow this podcast on Apple Podcasts, Spotify, or your favorite podcast app. For more episodes, visit bmocm.com/marketsplus.
The views expressed here are those of the participants and may not necessarily represent those of BMO Capital Markets, its affiliates, or subsidiaries. For BMO disclosures, please visit bmocm.com/podcast/disclaimer.